Good morning, Tony Virtue speaking, Virtue and Partners, and out of the Manly office in the Pitt Street office today. So there you go. Been a very busy time again, obviously, on the markets. I'll start with domestically. Each of the major banks gave a market update in the last few days. All of them have held their dividends, which is very important. Whatever you feel about them, the four banks are 25% of the Australian stock market, and they pay out 50% of the dividends. So very significant, and all up $28.5 billion of dividends have been paid September, October, November for the final dividends. So even though fair to say that October was a pretty rough month in Australia, if you start adding back the dividends, it's a very different story, and we need to see that a very, very different world in Australia, where very heavily overweight financial services, but much higher dividends than, say, the United States there. Turning to the United States, well, they had their midterm elections last night, pretty much as per plan, I guess. So what the pundits expected, the Democrats have regained control of the lower house, and the Republicans in the Senate. Markets like that, so the Dow up 500 points overnight, and in fact really has reversed everything that we saw in October. Maybe not so much in Australia yet, but certainly overseas. A sense now that a few more checks and balances, less likely they'll have looser policies from Trump. The effect of that is maybe not as aggressive an interest rate rise. So at this stage, really back to where we were before. It also means now that with the politicking behind us, hopefully we can get some decisions with the China-US tariffs. Trump's in there for another 2 years. Every opportunity now to knuckle down and get a working relationship with China, and that will also breed some confidence there. So look for that to happen fairly quickly at this stage. Worth looking at the differential between US rates, between their 2-year bonds and 10-year bonds. As you can see in the graph, not a lot of difference there. So even though interest rates have gone up over the last 18 months or so, seems to be fairly controlled at the moment, and let's hope it just stays in that zone, where effectively what that will mean is that the risk-free rate is going up. It means it's a bit like being on one of those inclinators. Life will get a little bit harder, you're running uphill a little bit harder, but you only do that when the patient is able to stand that kind of level of pressure. So that will be an important guide to look at as to the differential between a guaranteed rate of return from fixed interest as opposed to shares, which again, as I mentioned, overseas it has a much lower level of dividend, so it's very much a growth play there. And finally, I couldn't conclude without a comment on the Sydney property market, of course. Look, it has tightened, that's pretty obvious. So auction rates have tightened. Look at this as a positive. What we're seeing is more younger people coming into the market now as owner-occupiers. That is a much better lend to people who are going to live in a place to live for 20, 30 years rather than investors buying the 7th, 8th, 9th property. It will settle down. It's well worth looking at the differential between Sydney and Brisbane. So you can get twice as much in Brisbane as you can in Sydney. And as you can see in that graph, and common sense says that these things will level out over time. Property is absolutely fundamental to Australia. So expect to see some stimulus if it gets tougher. There's plenty of things that state governments can do to encourage investors back into the market. But what we want to avoid is a situation where we have a bigger drop at a later stage. Interestingly, when you look at Shanghai, when you look at London, look at Vancouver, the very similar circumstances going on around the world now. So this is not just an Australian problem. There's been a big run on residential property around the world, and really it's a much more healthy sign for this just to slow down and revert to the mean and come down to numbers which are more realistic. So look, we're rushing towards Christmas. We have a Christmas function soon. I look forward to seeing many of you there.